One of the first questions I always get asked is, how many contracts should I be trading? And what I typically tell people is that's really a judgment call based on your account size and your risk tolerance. One thing that I always recommend is to never go too big too fast. That's a surefire way to blow out a trading account. I would recommend, if you're trading on your own, to only trade 1 or 2 contracts per trade until you feel comfortable. And by that, I mean the ability to absorb the loss if it happens, and comfortable with your skills on adjusting the trade if it calls for it. As you have success and get more proficient in your trading, you can start to slowly add on contracts as your account grows. If you're starting out with a large account, it's still important that you're not trading a large number of contracts if you're a rookie. All option traders at one point or another will face difficult situations. It's a mathematical certainty, and I would much rather have you face that difficult situation on a small number of contracts versus a large number of contracts. Once you navigate your way through several difficult trades and understand the process on how to handle those, then you can start upping your contracts, as you will then have the skill to defend your money when faced with a situation. The time frame is different for everyone, but I would recommend at least 6 months to a year doing a small number of contracts until you know you're ready for something more. I would also recommend, for a smaller account, you never put more than 25% of your account value in a single trade. For a larger account, probably closer to 10% max position. And for really large accounts, 5% max position. If you have too much capital in a single trade, you're always running the risk of that trade going bad. So it makes more sense to have several smaller trades versus a few big trades. Traders that are in it for the long haul are able to avoid those big blow-ups that cost them huge chunks of money due to having a trade that was just too large. These smaller contract-sized traders live to trade another day, even after taking a loss, while the guys who decided to risk it and go big end up blowing out, losing their money, and having no capital left to trade. Remember, you're here to implement a long-term profit strategy that will last a lifetime, not for a quick buck that will risk blowing out your portfolio. The other question I get asked is, how much of my portfolio should I dedicate to option trading? That's a complicated question to answer, as that really depends on the opportunities that exist in the market. If there are a lot of good trades out there, I would recommend using up to 60% of the account value. However, if we're in a period of low volatility, don't make a trade just for the sake of making a trade. If the trade is not good, it's better to have your money sit than to work in something that is not worth the risk. We're not trying to hit home runs, but instead hit many doubles and singles. If you have not already done so, be sure to check out our free Option Strategies video tutorial at optionstrategiesinsider.com and learn how to trade options the right way.